Have you ever watched a market rally just completely evaporate in the last hour of trading? Well, that's exactly what went down on February 25th, 2026. It was a day of pure drama, a real tale of two halves, and we are going to break down exactly what that means for you. You know, this quote right here, it just says it all. We're going to look at both sides of this coin, the incredible surge we saw in the morning and that dramatic sell-off in the afternoon. By the end of this, you'll get the full picture of the powerful forces at play and what you really need to be watching for next. All right, let's dive right into this crazy intraday reversal. The market showed so much promise early on, but then poof, it all got wiped out in that final hour of trading. Let's dig into the numbers and see what happened. And this slide really lays it out perfectly. The morning, it was a sea of green. The Nifty was flying up over 200 points, but then, in that final hour, the bears came storming back and nearly all of those awesome gains were gone. Just a stunning reversal that left a lot of people scratching their heads. So after all that sound and fury, what did we end up with? A market that barely moved. A tiny gain of just 0.23%. This tells you everything you need to know about the mood right now. Investors are nervous. They're in total wait-and-watch mode, especially with that big GDP data release just around the corner. And you know what? This kind of indecision is often the perfect recipe for even more volatility. But here's the thing. That flat index, it doesn't even begin to tell the whole story. So if the main market was treading water, where was the real action hiding? Let's zoom in and put the sectors under the spotlight. And whoa, check this out. We're seeing a huge split between different parts of the market. Metals and auto were absolutely on fire, right? Probably getting a boost from good global news and strong demand. But then you look at sectors like PSU banks, and they were really struggling. This shows that people are being super selective. This is not a market where a rising tide is lifting all boats. Not at all. Now, this is where it gets really interesting. While the big, famous companies in the Nifty were kind of stuck in the mud, the smaller and mid-sized companies were actually doing great. And this is such a critical point because it tells us there's still a healthy appetite for risk out there. It's just that investors are having to dig a little deeper to find those growth stories outside of the usual big names. So we've seen the what, but now it's time to figure out the why. Let's put on our detective hats and start decoding the charts. We're going to look for those hidden signals that could tell us where the market is heading next. So the Nifty actually formed this exact pattern today. It's called a bearish candle with a long upper shadow. Now, I know that sounds super technical, but the story it tells is actually really simple. Think of it like a tug of war. That long, thin line at the top, the shadow, that's where the buyers pulled the rope way, way up during the day. But then the sellers came in with a vengeance and just slammed the price all the way back down by the close. It's a huge visual cue that the sellers are very much in control at these higher levels. So what's the bottom line here? What does that pattern mean for us? It means the market basically ran headfirst into a brick wall at that 25,600 to 25,650 level. Seriously, you can think of it as a new ceiling that the bulls tried to smash through, and they failed. This is now the key resistance zone everyone's going to be watching. Okay, let's put some names to this story. We're going to get down to the nitty-gritty and look at 5 specific stocks that perfectly capture the split personality of this market, this battle that's playing out between the buyers and the sellers. And this table just lays it all out, doesn't it? On one side, the bullish camp, you've got Tata Steel leading that powerful metals rally, Bajaj Auto smashing through a huge psychological barrier, and HCL Tech making a really sharp comeback. But then you look at the other side and you've got these heavyweights, SBI and Reliance, acting like anchors, just trying to drag the whole market down. This is the tug of war we're seeing play out in real time. So with all this going on, how in the world do you navigate it? We've got monthly options expiring. We've got that massive GDP data report coming up. Things could get choppy. We need a clear game plan. So let's talk strategy. Here's a simple 3-step approach. First, just be aware. Expect some serious chop tomorrow. Buckle up. Second, if you're a bull, the strength is clearly in metals and auto, so watch those sectors and see if they can keep up the momentum. And third, if you're leaning bearish, keep a close eye on those weak heavyweights like SBI and Reliance, especially if the Nifty breaks a really important level I'm about to show you. And here it is. This is the single most important number to have on your radar, 25,400. If the Nifty breaks below the support level, it could kick off a weave of selling called long unwinding. Basically, it's like a domino effect. Traders who bet on the market going up are forced to sell to cut their losses, which creates more selling, which forces more people to sell, and it can snowball really, really fast. So keep a very close eye on 25,400. So, after a day that tested both sides of the aisle, here's the million-dollar question. Who wins the next round? The bulls or the bears? With that crucial economic data looming, data that could really justify either more optimism or more caution, the stage is absolutely set for a major showdown. Which side do you think is going to blink first?